Froze for a minute. Okay. Well, good afternoon. We're here today with Emil from Counsel CPA, CPA Counsel, Counsel CPA. Emil, what is it?
Counsel CPAs and advisors. Thank you so much, Jody. Hope everything
or,
is good
or
with
we
you.
could call you, the real CPAs of Beverly Hills or LA. But
The
anyway,
real CPAs of LA. I think I like that. I think I like that. Let's
to
do
get
it.
started today, we are going to be talking about entity structures for law firms. And so, my first question for you today are what are the most common entity structures for law firms, and what are the pros and cons of each?
Yeah, absolutely. So law firms can run their business through multiple different entity structures. When they start up, they can start up as an easy and simple structure to kind of get it up and running. It's not much formality. That would be a sole proprietorship. So you start up, you basically don't need anything other than registering it with your state bar, and you're up and running. You have your law firm going. There's no IRS or other state requirements to file any documents to have a sole proprietor. The benefit is obviously it's very easy to set it up. You're up and running in just in a day or two. But there are some disadvantages from tax perspective. You don't have as good of benefit that you could from an S corporation, for example. So we'll talk a little bit about the benefits from S corporations, LLPs, and LLCs also. Uh, but the benefit again with a sole proprietorship is a very simple structure, easy to get up and running, and it works perfectly fine when you're just a solo owner. You're just starting off and start operating.
So,
Uh,
how do, though, different entity structures affect those tax obligations for law firms?
so for example, one thing sole proprietors cannot benefit from is the Social Security and Medicare tax benefit. As a sole proprietor, whatever income you make, let's say you make $100,000 net profit after your expenses, the entire $100,000 would be subject to self-employment taxes, which includes Social Security and Medicare taxes, as if you're an employee of your own company. If you're an employee of any other company, let's say you work for a law firm as an employee, you would pay half of your Social Security and Medicare taxes, and the law firm would pay the remaining. That's how it works. So you split it. You split your payroll taxes with your employer. But when you're a sole proprietor, you don't have an employer, and you are the employee. So it's the same person. So you end up paying for both portions, which ends up being roughly 15%. By incorporating your business from a sole proprietor to an S corporation, you kind of get away from the 15% self-employment taxes, because S corporation income is not subject to self-employment taxes, which is a big benefit. If you make $100,000 profit, which a lot of law firms pretty quickly get to when they start operating a law firm, you would save $15,000 or 50, you would save $15,000. You would save $15,000 roughly in taxes by just changing your structure from a sole proprietor to an S corporation, which is obviously big benefit for just $100,000 profit. But there are some backdraws with it, and IRS knows about this. Obviously, they're not stupid,
Mhm.
and to kind of get around that, IRS is requiring shareholders of S corporations to take a reasonable salary from their own corporation. What does
Mhm.
that mean? So a reasonable salary would be any any person that does what you're doing, the amount you would pay to any person that does what you're doing. So if you
Mhm.
would hire another person for your position, how much would you pay that person? Let's just say in a $100,000 scenario, you don't need a full-time person to run the operation or be the owner. You would hire someone for part-time and pay that person, let's just say $50,000. So you pay that person $50,000, and instead of paying that person, obviously you don't have an employee, you take that $50,000 yourself. On that $50,000, you would have to pay the same payroll taxes that a sole proprietor pays for their sole proprietorship, the roughly 15%. So you pay part of it on the payroll amount, but not on your profit amount, on the remaining $50,000 that you're taking as a profit distribution. What does this mean is that, as a S corporation, you have more flexibility to decide what your payroll amount needs to be and only pay self-employment taxes on the payroll and not on your entire profit. Versus a sole proprietor, you pay self-employment taxes on your entire income. You don't have a choice to take payroll versus distribution from the business. Does that
You
make
know,
sense, Jody?
it does. And a lot of times, like I know I've talked to people in marketing as opposed to a law firm where they've developed an S Corp simply because of the amount of money coming in. You have to have a significant amount of money coming in, right, to do an S Corp, I would think. And
Uh,
that's really how law firms are, right? They're bringing in some good money,
Yeah, depends what significant amount is. Significant amount for me might not be the same significant amount for you, but
right?
typically what I say, if you make 50,000 or more in net profit after your expenses, let's say you bring in $80,000 revenue and you have expenses, you have employees or office expenses, and the net is $50,000 or more. I typically recommend law firms and other businesses also actually to incorporate, because the benefits will exceed the additional administration and additional work that comes with an S corporation that a sole proprietorship does not. And what are those additional administration? For example, you have an additional tax return you have to file for an S corporation, whereas in a sole proprietorship sole proprietorship scenario, you just file your business income tax return with your individual tax return. So you don't have a separate income tax return as a sole proprietor. But an S corporation, you would have a separate S corporation tax return. You would have to pay yourself payroll, as we just discussed. So there's an additional layer of administration to administer the payroll and processing. You probably will hire ADP or someone else to do your payroll, but there's an additional layer of administration. But if you make 50,000 or more in net profit, the tax benefit will exceed all of that in my opinion.